I am Shreyash Devalkar and welcome to the monthly equity outlook. I will be taking you through the markets this month, triggers in the coming months, and the investment opportunities for investors. Equity review. The month started on a choppy note with most markets across the globe declining amid increasing concerns of a slowdown in the US, rising geopolitical stress, and sharp appreciation of yen due to unwinding of yen carry trades. However, markets returned to normalcy and most indices across the globe touched highs. At the most awaited symposium at the Jackson Hole, the Fed Chair Powell affirmed expectations of an interest rate cut by alluding that the time has come for policy to adjust. While he did acknowledge that the labor market has been cooling, Powell also said that the inflation is on the path toward Fed's 2% target. In response, in India, the Nifty crossed the 25,000 mark while US indices also traded at all-time highs. Earnings season. After the earnings upgrades seen in the last few quarters, we have seen some cuts in the estimates after the Q1 earnings. Earnings growth itself remained weak this quarter, with overall revenue growing at just 8% despite weak base quarters. EBIT growth slowed to 4%. PAT growth was close to zero. Weak earning of OMCs has tempered overall earning growth, while auto, real estate, and telecom reported improved earnings. Triggers for the market. The important trigger of this year, election and budget, have passed. Looking ahead, slowing global growth, the outcome of US presidential elections, and global geopolitics could be the likely triggers for the market, in addition to increased equity supply from promoters, private equity, and large pipeline of IPOs. All eyes on the Fed's monetary policy meeting, where it is widely expected to lower interest rates. Investment opportunities for investors. Overall, we remain positive on the markets and continue with our theme of being overweight consumption, investments, and underweight exports. In line with these themes, we have launched the Axis Consumption Fund. The NFO is currently on till 6th September. We have highlighted time and again that markets may never go in straight line, but may witness bouts of consolidation. Nonetheless, one should remain invested in the market than trying to time the markets. Thank you for watching this video and keep following this space for more updates.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.